Hey everyone, welcome back. I'm Stephen from Total Market Traders, and today we're going over the DXY. So this is something we've been going on for a while now, so let's get into it very quickly. To preface it, we're going to not release it straight away. Reason being is there's the US Fed rate hike announcement today. Price action, I would quickly say, has sort of priced that in. There's a higher likelihood. Just the way price action has been over the past quarter and a bit, or past few months, it seems quite likely we're going to see a rate hike. And reason being is this to do with stuff that we go over in our blogs that Greg goes over really well, and just through technical price action we've seen a few little bits and pieces. And if we can show you here now, what I've done here is a quick tip. If you go on to FX Street, Economic Calendar, or Forex Factory, whatever suits you better. I personally, at the minute, prefer this one. That could change, obviously. But if you want to see just high impact announcements, there's a slider here which sort of filters out all the noise, and you can just get to the basics, or the basic high impact news if you want to be aware of anything. And anyway, so in 5 hours and 51 minutes, so it's 10 past 1 GMT in the UK, and that should be, yeah, that's 7 o'clock GMT, and yeah, as you can see here, actually just noticed that, and we can see that there's the Fed interest rate hike decision. Now, they did hike it last time, 0.25 basis points, so 1.5% interest rate. There is the sort of higher conclusion that there is going to be one. Will we see one is unknown, and it's something to keep an eye on, and a very close eye on. And if you've any running dollar positions, consider scaling out. Or if you've been in, if you've within the past 24 hours, I would consider scaling out myself. If you're a long-term holder, I would just continue to hold. If stops get hit along here, if price just suddenly sinks, well, so be it. That's the trade over for me anyway. So we could see a bit of volatility. What we could see is, if there is a rate hike announcement, is we could still see volatility and it could still come down. Now, the reason instead of going up, most people think it just goes straight up. That's not the case. The market does whatever the market wants to do. You can't place you can't say, oh, it's going to go up. That's not true, because the market, like I said, just does whatever it needs and wants to do. And what I would think is slightly higher likely is, even if there's a rate hike announcement, say 0.25 basis points, there'll be a pullback to this area, maybe even here, and followed by a bounce quickly up next week. Or maybe not even as far as that. Maybe, let's draw on some fibs to give a bit more accuracy. Pull back to this sort of, let's see, 0.318, 0.5. So it's in a nice little zone here. You can see some volatility down to that area. There's a retest sort of this zone. And from there, that's where we can see price head higher with the 0.25 basis point rate hike. It's very unlikely that it's going to continue all the way down, because capital will want to gain interest on the dollar, and it makes sense to sort of hold it longer term. Now, if they come out with a surprise and they raise it 0.5 basis points, we could still hit lower, but it's more likely we're going to head higher, because if the market's expecting a 0.25 rate increase, well, that's already sort of priced in. If it's not, and it's a 0.5, which is, i.e., an extra 0.25, so that's a surprise, and it could cause the market to go up. So that's a couple of things to keep an eye on. I'll pause the video here, and this video will be a little bit longer, and we'll come back to it either later on today or tonight or something, and we'll see the actual, what the result of it was essentially. We're in, if we look at intradays very, very quickly, we could see a break of this trend line and if we were to look again on daily here, takes us to there. So yeah, we could get if we get a break of this, we get a pullback down to this zone, or we could see a higher low form, and that's where the trend could start to continue on. And that's the sort of thing I'm sort of looking at right now. So yeah, we'll come back to this later on, and we'll discuss what's happened quickly, and then if you're interested in finding out a little bit more, you can just head over to Greg's blog, which will be released for this week at the end of probably Sunday, and he'll explain in more details to what happened within the Fed meeting and stuff like that there. So we'll see you in a bit, and yeah, cheers. See you in a bit, guys. Hey everyone, it's Stephen again, just back, and we've 10-15 minutes ago got the FOMC out. They did raise rates 0.25 basis points it seems, and just in line with consensus it seems to be here, and yeah, so they've obviously went to it. Now this is what I was saying earlier, was the reaction to it. Now remember I was showing you here this very clear upward sloping trend line on the 60-minute chart. Now I was saying that if price breaks below this, we could see a bit of a correction, especially once the FOMC comes out. It could be priced in somewhat from this little rally. We get the news, so it's a buy the rumor, sell the news, and it comes down more than likely to 93.5 between there and 93. That whole area is basically a zone of where it can bounce. Now as you can see here, it is dropping quite a bit. There wasn't an overly large amount of volatility, but there was a little bit. It's in line with what they're expecting, so just have to see what the Fed says. I think today is Fed Chair Yellen's last day, so going on what she says could move this market to the upside or the downside. We don't know yet. Those are always little surprises that they can announce in their meetings and whatever. And yeah, it's just pretty much just keeping an eye on this, and worst case scenario, if this was to turn into a massive bearish engulfment and come all the way down here, then that's probably the dollar trade over, but that's very unlikely. It's quite unlikely for it to also go all the way up here. It's more than likely going to have a bit of volatility, possibly more likely down to this sort of zone 0.5 fib retracement. It's almost at the 0.318, which is again 93.5 is a key level as well, somewhat, and maybe not the cleanest key level, but it's a key level if we go back in time. And that's why, you can see here. So I believe as long as we keep that support level held, we can see the trend resume and possibly head higher. If there was a rate cut or no rate hike, this would have been an all-out meltdown, and that would have been probably the end of the dollar trade. But as it is, they're keeping to their consensus. They're delivering. What would have been nice if they had done an extra one, which instead of 0.25, 0.5, which would have boosted it up slightly. But the price action here longer term does suggest the fundamentals are starting to turn. Now fundamentals and everything are always usually reflected in price action months before, so today's reaction is not something that we trade off, and this is something that's been priced in by larger banks, and they'll know what's sort of coming way down the line. Even back here they'll know, and this is why you see these large turns. We see large turns like this, then it comes down, turns into a large turn like this here, and you can see this is in preparation for more than likely a 2018 bullish run, and that's just going in line with the fundamentals and everything that's coming along. Be interesting to see what Greg comes out with or in his blog post. He usually goes into really good detail on the stuff across all the currency pairs, such as the euro, kiwi, see which ones have the best opportunity. Some people might think short in euro is the best opportunity. It might not be. Might be something else or whatever. Euro is a bit of a funny one at the minute. Something that Greg was over in during the ECB announcements. That's what's making it a little bit funny at the minute. So there could be opportunities elsewhere, which we point out in the blogs and watch this and whatever. But this is pretty much all in line with what I was saying earlier. Pretty much priced in, comes up more than likely pulls back down to this zone, and we shall revisit this either later on tonight or possibly tonight after the Fed meetings and all are over, and see how the price has reacted then. So this will be a little bit longer than normal, but yeah, just sort of give you a thought process and how we go about doing things in a this is like pretty simplified manner, and yeah, so we'll go from there. So hope you've enjoyed it so far, and I'll see you in the next one. Hey everyone, welcome back to this third part of the video. This video has gone a little bit longer than usual, but it's fine. It's just something to sort of showcase thinking in the moment and sort of going from bit to bit. So let's have a look here. I'll show you something. Alright, Greg last night mentioned to me the dot plots. Now they've changed a little bit, as you can see, even here and here, and they've morphed a little bit. So Greg will go over that a lot more within his blog post as to how that works out and everything. It's too much for this video, so just say it's basically just changed a little bit. On the technical side, now that the fundamentals are out of the way, they've been mentioned and all that there. We don't trade fundamentals like that. There's no need to. There's just too much stress behind it. What we do is be aware of them, because there's volatility quite clearly, as we can see throughout the video and the charts here. Now jump down into the 4-hour chart. Something that strikes me a little bit is there is a tiny bit of a head and shoulders here. You get the left shoulder, the head, and the right shoulder seeming to form. If we break below this, we may need to change our bias. Reason being is because that's a technical breakdown and it's starting to put in a lower low. But right now, it's kind of range bound. Now it's at a high, low, lower high, lower low, lower high, higher low, higher high. Now it's starting to put in a higher low. Now what that means is, remember last night I was saying about the fib levels possibly coming down between 95.5 and 95.3 or so. It's tested that area pretty perfectly right now, and ideally over the next day, even today, we get a nice swift bounce off that line, off this area, and then we can start to trend higher. If we don't see that, then yeah, things may be starting to turn slightly, which is fine. It just means we need to change our bias in any positions. It may have longer term. We could just leave them open. It doesn't really matter too much if you've accepted the risk and just sort of see how it plays out. Right now it seems a bit early to try and close anything out. Just feels a bit whippy. I haven't changed my bias to bearish or anything. I'm still currently firmly bullish, but in order for my bias to change, we'll need to see a break and close below this key zone. But right now we're respecting the fib levels, which are 0.5 at the minute. We could see a 0.6, but the most likely is the 0.3 and 0.5 before seeing a continued trend higher. So that's pretty much it. We can sort of wrap this up now, and apologies for that. We can wrap this up now and go on to the other videos. Like we're doing ones on cryptos at the minute, certain cryptos. So anyway, hope this was some help. You've learned something new, or if you're brand new to this, you've learned something new. If you've got a bit of experience, maybe just opened your eyes a little bit more, and you can see how we can plan things out. Remember yesterday we sort of planned that if this line was to break, it could break downwards and all that there, and we could see this. Whenever it was here, we could see between 93.5 and 93.3-ish area. We're in that area right now, so for price to bounce would be really nice, because this is a previous support resistance. Now it looks like it's been supported again, so just have to wait and see. And yeah, that's pretty much it. Everything's wrapped up now, and we'll hopefully this again will say some help, and we shall see in the next one. Thanks very much. Cheers. Everyone, just to quickly wrap this video up, and we can see, basically our 3 steps along the videos. We got all the technicals here on the daily, the weekly, then the intraday, as we were going over before, showing you the break of the trend line during and after the Fed rate announcements and everything. And we were looking for this key zone of 93.5 and mentioned 93.3. That's this very, very key zone to bounce from, which we've seen exactly. And now price has just bounced, retraced, and then just bounced even higher. So that just shows our entire thought process, both from the technical and the fundamental side. Now we go over this sort of stuff, and we do this all the time. That's how we sort of analyze our trades and get a sort of bias and thesis for everything that we do. So it's quite a simple process once you learn it and once you understand it. And it's just a sort of rinse and repeat method over and over again. We've done this many times before, and this is just a very, very key example to show you here right now. So hopefully you've enjoyed this and learned something new. At the same time, if you want any question, or you have any questions, please absolutely feel free to email us, comment. You'll find us on Instagram, Facebook, and so on, and we'll get back to you as soon as possible. Have a great weekend, and we'll see you in the next one. Thanks.